Okay, I want to be respectful for everyone's time, so we're going to get started, and then as more people join us, we'll welcome them in. But good evening, everyone. My name is Heather Chernoff, and can someone just give me a thumbs up? You can hear me. Okay, awesome. Thank you. I am the Associate Director of Next Generation Engagement here at NJIT in the Alumni Engagement Office. This session is being recorded and will be available on demand. Thanks for joining us to kick off the first session of the Adulting 101 series. I'm really glad to welcome you to tonight's session, Building Credit with Confidence. Adulting 101 is a brand new webinar series designed to help young professionals in the Highlander community feel more confident navigating life after college. Each session will cover practical real-world topics like finances, like tonight, benefits, career development, and wellness to support a smooth transition into adulthood. This series will continue to run virtually throughout the year and is open to all NJIT students and alumni. It is sponsored by our Young Alumni Association, which represents our graduates of the last decade. To learn more how to get involved, please feel free to email me anytime. My email should be in that confirmation link you got, and I'll also send out a post-event email as well. So before we jump in, I just want to share some details on how things will work tonight. When you entered, your microphones were muted, and we kindly ask that you keep them muted throughout the presentation. You're welcome to keep your video on or off, whatever you're comfortable with. And please feel free to type questions or comments in the chat box. I'll be moderating it. So feel free to enter them throughout the session, and then we'll take some time at the end to answer those. I've sent a link at the very top of the chat box. That's a link to our post-event survey. We're always looking for feedback. So if you wouldn't mind taking time once the webinar is finished to fill that out, I'd truly appreciate any feedback you can give. And so tonight you will learn the basics of building credit, a breakdown of credit scores, smart credit habits, and actionable tips to help you set yourself up for long-term financial success. It is now my pleasure to introduce our presenter, Vincent Cerone. Vince graduated NJIT in 1982 with a bachelor's in computer science from what is now the Yingwu College of Computing. During his 40-year career in technology, he has worked with several Fortune 500 companies, including industry leaders such as Xerox and Hewlett-Packard. Vince is dedicated to community service. He volunteers with Habitat for Humanity, where he was part of an outreach team. In this role, Vince helped potential homebuyers by providing guidance on improving their credit scores, enabling them to qualify for a mortgage. And so with that being said, I am pleased to turn it over to Vince.
Thank you, Heather, and welcome everybody. Thank you for taking the time. I assure you it's time well spent. Let's move forward. So credit scoring or your credit report is something that you normally don't think about until you really need it. I know when I graduated college, I got a job. I was driving up, I live in Colorado now, but at the time I was driving 30 miles to Morristown to work every day in a piece of junk car. And I went to get a new car and they said, sorry, you have no credit history. And back then we didn't have, it was all cash. So in any event, I asked a family member to help me and I was able to get the car. But the point is that you don't know it until you need it. So it's better to get ahead of it and get familiar with it now. And this presentation hopefully will help you do that. These are typical credit score ranges. They range from poor to excellent. And these are known either as FICO scores or Vantage scores. Historically, it's been FICO, but now there's another company named Vantage. It really doesn't matter. The main thing is that the scoring is similar. And, poor scores are in the 300 to 500 range. Ideally, you want to be in the 700 range or above. There is a video. The link is here. I'm not going to run it now, but it'll be in the handout. So you can watch that. It kind of simplifies everything that I'm going to be talking about tonight. Looking ahead, if you're able to achieve a higher credit score, it will potentially give you the following advantages. The first one is the most important is lower interest rates. If you go to get a mortgage, and this is the example here, you could potentially save $200 a month if you have a high score versus a fair score. Now we all can do a lot of stuff with $200 a month, so it would behoove you to make sure that you're on top of this and make sure that you achieve the highest score that you can. Also, higher scores gives you access to premium rewards on credit cards. Um, I myself have a Chase card, and it's linked to Southwest Airlines because I live out in the West here, and it gives me so many advantages. It gives me so many free flights. My wife travels with me everywhere I go for free. So I pay a little extra for that card, but it's well worth that investment. And that card is only accessed to people with higher credit scores. Also, you get higher credit limits. So when you get a credit card, you will, if you have a higher credit score, they will extend larger credit lines. And when we go on in the next couple of slides, we'll understand and I'll talk about maintaining a low credit utilization ratio. And it's very simple. We'll go through an example and it'll be very clear to you. And then easier refinancing. There are many times that you will have some type of loan, interest rates will drop, and if you have a higher credit score, it'd be easier for you to refinance that loan and get a lower rate and a lower payment. This slide will be, I'm going to put it at the end of the presentation. It's very simple. There's two ways to increase your credit score. One is passively, and one is actively. So if you don't want to do anything, the passive approach would be number one, pay your bills on time. Do not miss a payment. Minimize the number of credit cards that you have. I recommend 2 or 3 max. And the third one, and very important, is live within your means. And we'll talk more about that later. Try never to have a balance on your credit card. I know it's really hard, but in any event, if you do those 3 things, your score will be above 700. The active approach is to actively check and understand your credit reports. And I'm going to click on this link. There we go. This is annualcreditreport.com. It is a place for you to get free credit reports, and it's authorized by the federal government. So this link will be in your handout, and I would say go here. There's no charge for any of it, and it's a reputable site. There are plenty of other sites that you don't want to go near, but this one is safe. Let's dive into credit scoring. There are 3 credit reporting agencies using 2 different scoring methods. There's TransUnion, Equifax, and Experian. And they use 2 different scoring methods, Vantage, score 3, or FICO score 8. It doesn't matter. They're very, very similar. The graphic on the left we'll be using as an example. The different scoring methods have slightly different percentages, but we're going to use this one. And if you understand this one, it's all pretty much the same. But just note that there are 3 reporting agencies. And when you go to for a credit card or a mortgage, the company you go to will use one of those 3 agencies, and those agencies use the different scoring methods. It's pretty simple. I use Chase and they use Experian. My Chase account, I have a savings account, a checking account, and a credit card through them. And they also give me free credit scoring and credit reports. So there are plenty of ways to get it for free. You don't have to pay for it. MyFICO.com also, which uses Equifax data, or the Equifax agency, also is free. And if you have a subscription to Office 365 and you download MS Defender, it will give you, it uses Experian, and it will give you your credit scores and credit reports. And that's something I just found very recently. But the main thing is all the scoring methods are very similar. These four items, which are part of the graphic on your left, affect your credit score. We're going to focus on number one and number two because they account for 74% of your score. So the first one's really easy. Pay your bills on time. The second one has to do with credit usage, and we're going to talk about the other three. The credit history and also inquiries. So we'll talk about them in the next slides. The first one, and this is 34% of your score, is the credit utilization ratio. And in general, you should not use more than 30% of the credit that is extended to you. And I'll explain that in this example. If you have two credit cards and each card gives you $5,000 of credit and you charge $1,500 on each card, that'll be at 30%. So you have $10,000 in credit, you charge $3,000 on the two cards, and your credit ratio is 30%. That will negatively affect your score. So it would make sense for you to understand the credit that is extended to you on the credit cards and keep your usage below 30%. Using this example, let's say you do go over 30%. What things can you do to correct it? Because your score will go down. Well, the first one's easy. Don't charge over 30%. The second one is to pay off your credit card and get the level below 30%. Number three is an option. It's not a great one, but it is ask your credit card company for a higher credit line. And this will trigger a hard inquiry, which we'll talk about in the next slide. But this will negatively affect your score initially. But let's say you ask them to increase your credit on one card from 5 to 7,000, which gives you a total of $10,000 in credit. Your $3,000 now is less than 30%, and your score will eventually go up. So the problem with this is it will go down because of the inquiry, and then it'll go up later because you're using less credit. The fourth one is another one. It's not great. It's to open a new credit card, and this again will trigger a hard inquiry. That is a negative effect on your score, but your total available credit will go up, and your utilization will go down. So, in any event, try to stick with one or two. It's just I'm showing you these other options because it kind of gives you an idea of how the system works. So stay within your credit limits, within 30% of them, and you'll be perfectly fine. I had a situation myself where 2 years ago we had a hailstorm here, and my house was damaged. So I had the insurance has a very high deductible on hail damage here, and the whole house had to be resided. So I had to come up with the money to to put hail-proof siding on the house, plus the deductible. So I didn't, then in the spring, right after it was fixed, my HVAC went. So I didn't really have the money to pay for that. So I asked the vendor or the contractor if you had an 0% financing arrangement, and they did. So I signed up for it, and it was immediately um, approved. And then once it went in, I exceeded 30% of my credit, and my scores went down 30%. That's actually 30 points. So I didn't really care because I was getting the 0% financing. But after a couple of months of paying it off, my scores went back up. So there are times where it's going to go down, but for a good reason. Let me talk about credit mix and length of credit history. This is a total of 21% of your score. You really can't do anything about the length of credit history. It has to kind of come as time goes on. But the credit mix, you should understand. And the type of credit in the mix, there are three. The first is revolving credit, which means it's like a credit card or let's say a store card like Macy's or Costco. Uh, those cards will be under the revolving, and those are, you charge, you pay, you charge, you pay. Installment would be like mortgages, auto loans, or student loans. And those are basically you have a fixed principal and you pay over time to pay them off. And then the third one you should know about is open accounts. So if you go to rent, excuse me, the utility companies will report to the credit agencies about your payments. So that would be your electric, your gas, your water. So just be aware that that's out there. So those three items make up your mix of credit. And using all of them is actually a positive on your credit score. So, but as long as you pay them off. So here I'm going to talk about inquiries. It's only 5% of the score, but you should know what they are. There's hard inquiries and then there's soft inquiries. Hard inquiries are if you're applying for credit, you apply for a new credit card, a mortgage, a car loan. Um, if you if you go to rent a rental application, those are hard inquiries because especially with rent, they'll definitely check your credit and you could be denied based on if you have a very low credit score. Also, a credit limit increase is also a hard inquiry. I mentioned that earlier. So if you ask your credit card to give you more of a credit line, it will negatively affect your score. One thing to note, multiple inquiries for mortgages and car loans within 14 to 45 days are treated as one. Now, that's important because if you go out to buy a car, you might go to different dealerships that sell different types of vehicles. So if you do that, it will only be treated as one within 14 to 45 days. Also, the same thing with mortgages. Soft inquiries is just simply checking your own credit. It has no effect whatsoever on your credit score. Background checks, if you go to get a new job, many employers will do a background check. That does not affect your credit score. And pre-approvals for mortgages, which if you in the future go to buy a home, it's always a good idea to get pre-approved so that you know what um, how much credit or how big of a loan that you can afford or they will give you. But those pre-approvals have no effect on your credit score, so don't be afraid to go out and do that. So here are basically 6 strategies that you can use um, to allow you to use credit wisely and also monitor your credit. So the first one is don't carry a balance on your credit cards. I know it's easy for me to say that, but think about when you're going to buy something. Do you want to pay 20% more for that item? Probably not. So be cognizant of the fact that if you don't pay that off after the first billing cycle, you will be paying 20+% interest on it. There may be cards that are lower. I haven't found any. I just pay mine off every month. Use and ask for 0% financing. So when I buy furniture, I never pay for it up front. I always ask for 0% financing. I pay for it over 6 months to a year at 0%. So I would say use that. It helps you, with your cash flow because furniture and different things are large purchases. My Chase card, and I don't know if other banks do this, but they offer a pay over time option. So if I buy something that's large or costly, I can pay for it over 6 months or 3 months, 6 months, or a year. And they charge, it's probably like 5%, which sounds a lot better than 20%. So if your credit card, see if they offer something like that, you could use that in certain cases. Again, with your cash flow and allow you to keep paying your bills properly. Number four is stay away from subscriptions that promise to increase your credit score quickly. You can just do it on your own. It's all basically for free. So if you use the links in our handout, there's plenty of ways to do it for free, especially the checking your credit report at annualcreditreport.com. And then monitor your credit with free accounts at reputable sites like myfico.com. All of the credit reporting agencies have their own ways to monitor your credit at no cost. They will try to sell you something, but don't do it. Uh, Chase, like I said, Office 365 with Microsoft Defender includes free credit scores and reports. So the scores are what I've been showing you on that graphic. The reports actually show you each of your accounts that are open and what the balance is on them. And you're usually a little behind, but it's always good to check to see. Like I have one credit card I never use. So it's good to see you go in there, and it's like, oh, there's nothing on it. I'm good. So anyway, it's a good idea to look at your reports too, not just the scores. And this is basically the same slide I put up initially. To increase your credit score passively, just pay your bills on time, minimize the number of credit cards, and live within your means. And then actively go out and check your reports and scores. The handout will give you all of that information. And that's it.
Thank you so much, Vince. I feel like after this, now I want to go check my credit score. Um, so we will now open it up to any questions. Any question is a good question. Please feel free to drop any questions, comments in the chat box. I know we have one coming up, so we'll start with that one from Myron. Thank you. Myron asks, do we constantly have to check that the credit isn't above 30%, or is there an automatic way to do that?
So again, if you only have a couple of cards, uh, you'll know what each card gives you. Um, and so it's easy in your head to do the calculation to stay below 30%, or it should be. So if you have one, two, or three cards, it shouldn't be a big task, and you don't have to constantly check. Um, you just every couple of months you could check it, or like I said, there's sometimes your bank will actually give it to you, um, and you just click on it and it updates it pretty much all the time.
Great, thank you. We have another question from Sergio. Um, They ask, how do company credit cards or company loans affect credit for himself who has a small business?
Oh, I I am not sure. This is more for personal use, so it depends how the company's set up. I think it might be the company's extended credit, but sometimes the owner has to guarantee loans for the business if the business is new.
Right.
That's the only thing I know from my career because I had to deal with that. Hopefully that answers your question, but um,
And feel free to ask a clarification if we're not
yeah,
answering it. Yeah. But I would assume, right, if someone's opening their own small business, their credit will play a part in that, right?
I believe so because when it's a new business and there's no history, a lot of times the owner does a personal guarantee, which is really hard to do.
All right, well, thank you. We
Yeah.
have lots of questions coming in now. Okay. From Erica, they ask, what should a person do if they keep getting denied basic credit, like Discover Student Card, if they have a good or great Vantage score?
If you have a good score, you should be able to get a card. I don't know why they would um, deny you unless I don't know. Is it the first card or is it a secondary card?
Yeah, if you could just clarify
First
that one.
card?
We'll come back to that. I mean, I started with a Discover student card, and that was my first ever card. I'm just speaking off of my experience, and that's usually a good baseline to start building credit with. And I got that when I was in college. So if you're currently in college, they should approve you for a basic Discover student card.
Yes,
Um,
and I think if you get that card, you use it and use it, make sure that you pay it off and you don't miss any payments and all that stuff. And then you should, when you go to get your second card when you're working, I don't I can't foresee you having a problem, but just keep a check on your score and your reports and it shouldn't be a problem.
yes, and Erica did say this would be their first card. So let's go back. Drew V asks, will we have access to this recording? Yes, we will. Right after the session is over, we're going to work on getting this uploaded to the alumni YouTube and it will be available on demand. Thank you. Do you recommend cards with a fee and lower interest or no fee cards?
Start with no fee cards. And the only reason I use a card with a fee is I get back more than what I pay for it on the particular card that I'm using. So um, I would start with a no fee card. Um, and on a credit card, I don't know what lower interest rate means because I've never seen one.
What
But
is the, oh, sorry, go ahead.
go ahead.
All right. Nitya asks, what is the best way to start building credit if you didn't have a credit card before? We kind of answered that in the beginning, but go ahead.
You had mentioned the card for students would be the
Yes.
best way to start.
Yeah, so I
Um,
can speak on experience, and I think it's still around. I actually still have it. I've been out of college now 8 years, and that was how I started building my credit. It was a Discover student card, so I'm not sure if other companies offer a student card, but I know that's what worked for me. So if you can, I'm pretty sure it's still around. That's what I would start with. Uh, all right. Lena asks, is it a good strategy to pay the credit card before the statement cycle closes? That's a great question.
I do that a lot. Actually, I just moved my date of when my credit card closes to coincide with when I get paid. So I pay it like the day after the statement comes out, but you can pay it before that. It doesn't matter. Normally, I just wait till the statement comes out and I just pay the thing off. But like I said, there are times when I'll pay if I do if I charge something large and I have the cash for it, I'll just charge it and then pay it off. One example is I bought a car and I had a trade in. The trade in covered half the car. The other half I was going to pay in cash. So I just charged it on the card so that it got me to like free flights or something. And then I paid it off before the statement even came out. So yes, you can absolutely do that.
And does that affect your credit? Like, does that increase your score or it's just your, it'll
If they
maintain?
catch that large charge, yes, the score will go down. But then the next month it'll go back up because I paid it off.
Right.
So
Okay. Yep.
if your
Neil,
score isn't if your score is up high in the 700 or 800 range, it won't matter. It'll go down, but it'll still be high enough where it won't matter.
okay. Yeah, that makes sense. And especially if it's a bigger purchase.
Mhm.
So Neil asks, when exactly does reaching 30% on your credit limit negatively impact your score? Immediately upon the charge that brings it to that 30% threshold, or when you receive the statement?
It would be when you receive the statement, or uh, I don't receive any statements anymore, so it's exactly the day that it closes and the statement is available. That's when they report that to the agencies, and usually there's a month lag. So even if you pay it off, it'll take a month or two before it goes back up.
So
But
got
yes, it's as soon as the yeah, they don't report in between. They report it once the card closes for that month.
makes sense. All right. Dhruvi asks, at what point should you open more than one credit card? Because I had heard that credit checks, sorry, there's something in the way. I apologize. It says, at what point should you open more than one credit card? Because I had heard that credit checks that impact the credit score.
It does. So um, I recommend having more than one card. So I personally have a Visa and an American Express. And it's only because you never know if something happens, you can always use the other one. Um, but to answer your question, no matter when you open a new card, it's going to negatively affect your credit score. However, within a couple of months, if you don't use the card and you don't exceed 30%, um, it won't really have an effect. It'll come back up.
Great. Nitya asks, is it better to have my parents open a credit card for me for my first card or open it myself?
Good question. If they have the student card, I would use the student card. If they won't give you one, then you might want to ask your parents because, like I said, when my first car, I had to ask a family member to co-sign it. On a credit card, it's probably better to try to do it on your own if you can.
Mhm.
Like the student card sounds like a really good option. They'll probably give you a very low credit line, but still, just having it will get you started.
And for those of you that are current students, after this, I'll go ahead and we can go ahead and look on Discover to see more information about that student card. But I know that's the one that will initially get you in the door, so to speak, to start building your credit. You want a card in your name, right? Because it's the credit's going to be built under your names.
Yeah, not on your parents. Yes.
Okay, so that was our last question that we have here in the chat box. Oh, we got another one. And we definitely have some more time, so feel free if something comes up to add it. We want this to feel like a conversation. Okay, so Andrew asks, what should someone choose as their very first credit card? Is there a one size fits all?
It's either what you have Discover, you have Visa, or American Express. So um, I think Discover or Visa are widely accepted. American Express is usually when you start working, and if they give you a company card, it will be usually an American Express. Um, but I just keep one as if I didn't have an American Express, I probably would have a Discover. So, uh, which one you choose? It sounds like Discover, if they have that option still available for
Yeah.
students, would be your way to go.
Yeah, and you can look into it for a visa as well. But if, especially if you're a current student, that's what you would want to look for a credit card that is specifically for somebody that's still in school or early in their career. And then the other thing I thought of like is if you're, I guess there are certain credit cards that have certain rewards. So if you're interested in traveling, Vince, do you recommend looking into a travel card? I'm a very
Yeah,
big Disney person, so I won't lie. I have a Disney Chase card.
there you go.
Um, but right, it doesn't matter, Vince, what kind of card you get as long as you're building the credit on there
No,
or using it for purchases.
we were younger, I had a card that gave us cash back on groceries and fuel,
Right.
which were the two main cost factors at
That's
that
great.
time.
Yeah.
So there are a lot of cards that do that. So you really have to look out. I mean, for your first card, do whatever you can. But as time goes on, you pick a card that has advantages for whatever you do the most.
Great. Yeah. Myron asks a question, which I'll let you answer, Vince, but will we talk about the details of debit cards in this session, or a different one?
No, I can talk about that. I have a debit card, and the only way I use it is in the ATM. That's it. I do not use it for anything else. And the reason why is it doesn't offer you the protection that a credit card offers you. So if you go into a store, and honestly, I'm using the phone for everything now. I click, I tap.
Yeah.
So that gives you a level of security on your credit card, but the credit card itself will cover you if someone steals your number and uses it. Um, I had a situation where I had a contractor. I gave him my credit card number, and a couple days later, there was $1,000 charge at Home Depot, which I didn't make. And so I called the credit card company. I said, "Hey, I didn't do this," and they immediately took it off. If you do that with a debit card, that money is gone. It's almost like a check or cash. So again, I have a debit card. I only use it at an ATM, and I only tap at the ATM. I don't even use the card. I don't even think I carry it anymore. Because when you tap, it's a much safer way to. They have these card readers that, thank God, I've never had that happen. But
Yeah.
they have card readers that scan your card and steal your information. I don't think they figured it out yet on the tap. So
Thank God for technology. Swasti asks a very good question that I probably have myself. They ask, I have a corporate card, which I'm authorized to use for work-related expenses only. Does that card also count as part of my credit score?
you would have to ask your employer. I think it's really up to the employer because if you use it, let's say you use it irresponsibly, the employer is going to come after you, right? Um, so I would check with them. Uh, I don't think it does, but I could be wrong. I'm not sure. What I would do is just when you get the handout, check your credit reports, and that will give you that answer because you'll either see it on there or you won't. My chance, my guess is you will not see it.
Yeah, that makes sense. I'm gonna check that too because I'm on a work trip right now and I'm charging all the time. But
Yeah,
um,
I don't think it. I think it's on the university and it's
right,
on the company.
right.
I
Thank
can't imagine that it would. Yeah, I'm pretty sure that it's not on your. It won't show on there, but check your credit report, and that will show you.
Easy answer. All right, we'll leave it open it for a few more minutes. Does anyone else have any last questions? And thank you again. All these questions were great, and
Yeah.
really helped guided the conversation. I know, Vince, you touched on student loans. Oh,
Mhm.
can you just remind us, so how much does student loans play a part in your credit?
Um, it is it's an installment loan like a mortgage. So it will show up, it should show up on your credit report. It does not affect your credit line, like the 30%. It doesn't, they see all that, but it's separate than your revolving credit. Remember, there was three types. There was a revolving, installment, and then there's open accounts, which are from utilities. So the 30% that I talked about is only on the revolving credit, not
Um,
on not on student loans.
Not on student loans. Okay. Okay, we have got some more. Thank you guys. Nitya asks, do you prefer to use your credit card over your debit card for everyday purchases like groceries?
Yes, do not use the debit card.
Debit cards are really just for taking cash out.
That's the way I've done it for I can't tell you how many years. And now I use cash less and less. I may not even have cash in my wallet. I don't know because I've
Yeah.
been tapping on it for everything because
Yeah.
it's so much easier and it's safer.
Yeah.
Um, so I don't use a debit card ever to buy anything,
And
just to get cash.
oh, someone responded, you can max points using the right cards too, like Amex Gold or Capital or Saber One. That's true.
Mhm,
And I will say, speaking from someone who's a young professional, it could be scary in the beginning to use a credit card, especially if you're a college student. But it just goes back to really making sure you're living within your means and
mhm,
paying attention what you do have in your bank account with your, that's connected to your debit card and only um learning responsibility within yourself to only spend what you know you can pay back. Okay, so Neil asks, let me just make sure I didn't skip anything. Neil asks, is there a limit to how high a credit limit can be raised for a credit card? What is a reasonable amount to request for a limit increase?
Geez, it could be, on a credit card, it could be 10, 20,000. It could be more. It gets to sometimes, like in the past, it got to a scary amount, and I just called them and said, I don't want that much credit. Just, take it down. But I don't do that anymore because then that affects my credit score. Uh, but I don't know how high, uh, at some point it can be too high, but if you're gonna ask for an increase, I would just keep it within a reasonable amount, like 5 grand maybe, uh, 2, 3, 4, 5 grand. Don't go crazy. They may say no. I mean,
And I
they
guess,
will look at your credit and they will determine how much they will give you. So you can ask them, but they may or may not give it to you.
right. And I guess you would only really need to increase it if you know you're about to make, like, let's say you want to make a large purchase that costs uh $10,000. Um, I guess you just make sure, like, and you only have a $5,000 limit. You would say that's manageable,
You call them and tell them, this is what I'm doing, and they'll tell you, yeah, you can do that, no problem.
but you would only
Or
really
no.
increase it if you know you're about to make a large purchase, right?
Yeah, yeah, yeah.
Okay. Druvy asks, if I go over 30% of my credit limit and pay the amount immediately, would that impact my credit score even then?
If you pay it before the billing cycle, I don't think it will impact it.
Yeah, that makes sense. Nitya asks, is there a limit to how many credit cards that can be opened?
Yes. Um, so every time you open a credit card, it will be reported. So they, at some point, will say, well, no, you got enough credit. Let's go back to the example of $10,000. They may not give you more than that at this point, uh, but they may. So I don't think there's a limit on how many cards can be opened, but there's a limit on how much credit they will extend to you. So if you get to the third card or the fourth card, and they may say, "Well, you already have $10,000. We're not gonna give you any more. So no, you know." Um, but you have a bunch of cards with the $1,000 credit line. I don't know. It's really not the number of cards. It's the amount of credit they will extend to you.
They ask, is there a limit to how, oh wait, that we just asked that. If I increase the credit limit for a purchase, then can I decrease it later or will it stay at that increased amount?
It'll stay at the increased amount. And if you decrease it and when you decrease it, you go above 30%, it will negatively affect your score. So you just have to be careful when you do that. Um, the score will go back up. But if you're not comfortable having that much credit, then go ahead and decrease it. It may affect your score, but it will go back up.
Right. Um, Daniel says it's better to have more credit availability, so it's easier to stay under 30%, but you can ask to decrease it if you're not comfortable.
Yeah,
Thank you, Daniel.
absolutely, yeah.
All right. Druvy asks, does making multiple payment per month positively affect the credit score, or it doesn't have any effect? So I guess they're asking, like, if you make a purchase with your credit card, you go to pay it off immediately, and then you make another purchase and you pay it off again before the statement.
I would say it would be neutral. However, let's say you're over 30%, making more payments will only increase your score. But if you're under 30%, I'm thinking it's neutral. It doesn't really have
Yes.
any effect. It can't hurt.
Again, it feels uneasy to sit in that, wait for that billing period to be over, and you're sitting there knowing, oh, I have $800 in my that I know I need to pay off. So I understand wanting to make a couple payments to ease some of that stress.
Do it. It's fine. Paying your bills is never a bad thing. So
All right.
if you want to pay in advance, go right ahead.
I love these questions coming in. Thank you all
Yeah,
again.
very good.
So we're gonna oh so I'll take two more questions and then we'll conclude this session. But somebody just asked, if I make a purchase on a credit card, should I pay that off immediately or should I wait till the end of the month?
It's up to you. If you have a lot on the credit card, or if you're really close to your percentage, um, I would pay it off immediately. Um, if you're just normally paying your bills every month, then just pay it off at the end of the month, whenever you pay it. So um, there, there's no downside to paying it off. There's no upside to paying it off, other than if you exceeded the 30%.
Uh,
So I guess the answer it would be, if you exceed 30%, then pay it off immediately. If you don't, then don't worry about it. Just pay it off at the end of whenever you pay your bills.
Andrew asks, what is a credit card fact that most people don't know about?
Oh, I don't know. Uh,
That is a creative question. Thank you. We'll have to think of that. You know what?
We can think about that one. Yeah.
We'll think about a fun fact that fact for you and we'll put it in the post-event email. All right, this is going to be the final question for tonight. And again, you're always welcome to email me, and I can connect you with Vince, if that's okay with you, Vince, if you have any further questions, or if I can help guide you to a person that can help you support you in your early career journey. So Dhruvi asks, when does it make sense to product change instead of opening a new card?
What does that mean to
Yeah, Dhruvi, do you mind just clarifying what you mean when you say product change?
maybe it's up the credit line?
We'll give her a sec.
Like I heard about it is in if you're in like let's say I got a Chase credit card, but they have other credit cards in the same bank. Like you can get the other ones, but like if it's like a premium version of it, like you go from student to a regular one, and
Mhm.
it's called a product change. So is it better to do that or get a new credit card? Like once you are past like 2 3 years of building credit.
So, if I understand it correctly, I've never done that, but I think a product change would may not, let's say you have a card, the student card, and you want to get just a regular Discover card within the same bank, um, and you go from one to the other, it may not, since they closed the one and they opened the other, it may be a neutral, um, a neutral
Okay. Yeah.
change. You'd have to ask the bank, but it would seem
Yeah.
to me
Okay.
that since you're closing one and opening another at the same bank, they would treat it as the same card. But I'm not really sure. Certainly, if there's a higher credit on it, that may uh, negatively affect you, but very briefly.
Well, thank you so much, Vince. We're going to end on a fun question that somebody asked, and they want to know if, which has nothing to do with credit, but that's okay. They want to know if Colorado has scenery like in your background. Oh, I'm sorry. Can you just repeat that? You just went out for a second.
The area behind me is where I ski. It's up over almost 13,000 feet.
And actually, Vince sent me a picture. It really does look like that.
It is crazy. Yeah, it's beautiful. It's above tree line, so that's why it looks like this. There's no trees up there because it's above the tree line. It's just rocks covered with snow. But it's just gorgeous, amazing. It's in person is way more beautiful than you can imagine.
Yeah. Pictures never do the real thing justice. So everyone, I'm going to go ahead and post that post-event survey in the chat if you wouldn't mind just taking a few minutes to fill that out before we end tonight. Thank you so much again, Vince, and to everyone in the chat for participating in this workshop. I'm so excited that we kickstarted this program with such an important topic. I hope you found this session useful. Please look for a follow-up email from me on how to access this recording of the workshop. Somebody asked how we can get that. It will be uploaded to the NJIT alumni YouTube. Again, I will have the link for that along with the handout that Vince will provide with some of those important websites. And along in that email, we'll also have information on our next webinar, which is scheduled for Wednesday, March 25th at the same time. And I'll have further information on that soon. So thank you again, Vince, so much for taking the time to share your
Pleasure.
expertise and your experiences with us. And thank you to everyone for your questions. And I hope that you all have a wonderful evening and you join us again soon.